In this video, we're going to talk about the best and worst investments of 2024. I mean, we're just a month in, and I think it's time to really start hammering these down, nailing these down, make sure our portfolios are exactly where we want them to be. First, before I talk about any of that, let's talk about why you should take anything that I have to say seriously. First of all, I'm actively managing a multi-million-dollar real estate portfolio with multiple properties. We're at 7 properties right now. That is actively happening. So I would say I know a decent amount about that. 2, I've self-managed a multiple 6-figure portfolio in stocks that is also profitable. So, I mean, I think I have good enough knowledge about that. And then lastly, the one that's actually kind of the most crazy is I've made 10x plus off of the last 2 bull markets in crypto with multiple hundreds of thousands in profits with very little money put in. So I just wanted to put that up here so you guys actually take what I have to say seriously, because this is real stuff and this is real life, and you guys really need to hone in and look at what's going on and try to learn and understand what is going to happen this year and then how that will shape even future years. In this video, I'm going to go over all of the main asset classes and give them a rating from 1 to 10 on how safe I view the investment is for this year in particular. Before we get started, I'm curious, what do you guys think will be the safest investment of all of 2024? Obviously, you could go ways of like really safe, 2%, whatever things. But is that really safe? Is it really? Because I think your money's just on fire. So you got to find something a little bit better than that. So let's talk about if 2024 is a good year to invest or a bad year to invest, and why. 2024 is a very unique year, as there has been a crazy amount of turn ups and downs of the market in basically every market that there is in the last few years. Just to name a few, we've seen Bitcoin do a 10x since COVID happened. We've also seen house prices double. Like, where did that even come from? I remember when that first happened, everyone thought houses were doomed. Everything was going to go down and it was going to be bad. All of a sudden, houses doubled in value. That was crazy. And now we're even seeing the S&P hit all-time highs with an 8% interest rate. And if you know anything about stocks, normally stocks benefit from the marketplace and, trading and borrowing and lending being a very healthy market. Low interest rates, etc. And that's just not the case. I mean, it's just going up. But most importantly of all, it's an election year, which in typical fashions brings lower prices in everything consumer-wise. You guys have probably noticed like lower prices in gas and stuff like that. But most importantly, the interest rates. You've already seen rates come down 1%. And I feel like it would be a good statement if I said it would come down another % or maybe 2% this year. I could easily see that happening. But the main question in all of that is, why is a lower interest rate important? Other than if you're trying to buy a house or something, you're trying to buy your first home. Sure, a good interest rate's good, but why is that so important? Low interest rates in the history of the stock market have driven cost of said stocks sky high, and also the price of homes. I mean, if you see how they tried to reverse the effect of COVID and what it would have to the marketplaces, is they lowered interest rates so much that it actually just skyrocketed the price of houses, right? Because it was so cheap to borrow money. And now you see all these people just locked in with super good rates and they're just cashing a ton of money, right? Another huge thing happening this year is the halving of Bitcoin set for April of 2024. The ecosystem of Bitcoin will go from 6.25 Bitcoin every single day down to 3.125 Bitcoin every single day. So if you know anything about crypto, and if you've studied these markets or seen people talk about this and maybe don't understand it, essentially the ecosystem is going to go through a huge shock, because right now it's living on, double the supply that it will be living on in April, which means generally the price goes up. Now we have Bitcoin currently over $40,000. As I mentioned, 10x in the last couple of years because it was under 4K, and this just means good things. Now, things I've noticed is when one thing wins, it seems like everything wins. Like, you never typically see crypto just going crazy and stocks are falling and real estate's falling, or vice versa. It kind of seems like this all kind of either wins or all loses or all freezes. Like, there's really no market differential too much, right? Now, the thing that happens when all that goes down is the money will flow into each other. So like, if crypto goes crazy and a bunch of people make millions of dollars off crypto, they're going to cash out some of them rewards and then put it into the stock market, or put it into a bond, or put it into real estate, or whatever that may be. And because of that, it kind of all just feeds each other. So let's get into the actual investment and talk about what will be good, what will be bad. We'll start with the good, and then we'll switch to a bad every other one. We're going to go over 5 main asset classes, things that I feel like I'm knowledgeable speaking about. So number 1, we're going to start with real estate. Now, a lot of people has been calling for a downfall. I feel like it's pretty mixed. Like, half of the people are like, real estate's going to absolutely crush it. The other half of the people are like, No, it's going to go down. Now, the thing that I've been hard to understand being a real estate guy, it's the main thing that I do. It's the main thing my brain works on. Like real estate's my thing, right? Is if we already have prices either maintaining or rising in most places in the world with these super sky high interest rates, what is going to cause a crash? I mean, you have all these people locked in with a 3% interest rate. And if you talk to any of these people, they're not going anywhere. I mean, they couldn't even move into an apartment, bare alone like their 5-bedroom, 6-bedroom house for the same price because their interest rate is so low. So these people aren't going anywhere. And if anything, I would say them houses, anyone that would have a brain that would have them houses, if they wanted to move, would turn it into a rental because borrowing money at 3% is just such a good deal. So then people aren't going anywhere. And because of that, we just have a inventory crisis. Like there's just no houses for sale on the market. So with what I explained earlier, with interest rates going down, with the price of goods going down, and overall just more money being pumped into the economy, I don't really see how real estate could have a bad year in 2024. I know in 2023, in my market at least, we still went up over 10%, and I don't see why that wouldn't happen again, and maybe even more so. I know some markets did have bad years in real estate, mainly on the coast of America, but to me personally, I think real estate will have a very, very good year. And as the interest rates come down, it'll just appeal to more buyers. More buyers will be going out, seeing showings, trying to, get houses booked, and buy them. Ultimately is what's going to happen, in my personal opinion. So I would give real estate a 8 out of 10. I'm pretty confident that real estate is going to have a positive year this year. And ultimately, in the long run, real estate, very safe play. But in this year in particular, I think it's a W. I think you should go ahead and go for it. I am actively buying. I just bought one earlier this month. I plan on buying another one in spring. And yeah, we're going to keep that. We're going to keep that rolling. So over to number 2, we're going to go to the first negative one that I don't think I would recommend, which is government bonds. Now, government bonds typically pay, I think right now, around 5%. But in typical fashion, government bonds always benefit from a higher interest rate. So if interest rates are super high, the government can make a lot of money on your money. So they're willing to pay you more. But if interest rates go down, say they fall to 5%, well, if the government's paying you 5% on your money and they're only getting 5% back on their money, they're not making any money. And if you guys know anything about government, that's all that government's about. They want to make money. So in typical fashion, if the rates are going to come down, like we've already been seeing, and because of the election year and everything that's happening, ultimately, I think that will happen. If rates go extremely low, the investment can go down to even as low as a 1% return, which obviously then with inflation, you're losing a lot of money. Now, I don't think that big of a swing will happen. But when you look at other investments that potentially benefit a lot due to the scenarios that we're talking about, and then you're holding, say you have $10,000 into a government bond that potentially can go down on rates, well, why not flip that into something that you think might get a 10 or 20% gain? It just makes a lot of sense. And personally, for me, I'm going to put a 2 out of 10 in government bonds because ultimately it is safe. And even if you're making 3%, like it's better than just having cash. But I personally wouldn't be going that direction, but that's just me. Number 3, we have stocks. Stocks had an amazing year. I don't know how many of you guys hold stocks or do stocks, but we had returns over 20%, which is awesome. Like, bravo. I'll take 20% returns all day. And that's obviously if you're invested properly. I don't really personally believe in individual stocks, but I know some of you guys do, so I hope you played it the right way. And as mentioned before, we're currently at all-time highs in many of the holdings, most importantly, the S&P 500. So basically, the whole market is up for the year and up 20%, which is actually like a really, really good year for stocks. Normally, it's like 10% or something like that. Stocks normally very actively replicate what's happening in the world. So if there's crisis going on, normally stocks will go down. If things good are happening, normally stocks will go up. If we have positive interest rates, if we have money flowing in from cryptocurrency or other sources, right? Typically, stocks is a good place where people just throw their money when they feel like they're waiting something out or something positive is going to come or whatever. Stocks always seem to follow the market, right? So a lower interest rate and a more active marketplace typically results in higher prices. I look for stocks to continue to this trend and have another high yielding green year. I think stocks will do very well. I think, a 20% year, it's hard to predict a 20% year just because, a 20% year is tough, right? Like it's hard to get there. But I'll give stocks a 7 out of 10. Safe, good investment. I would see no reason to sell out of stocks at this time. Now up next, and probably the thing that I'm going to give the lowest rating in this whole video is money market accounts. Mainly being because a lot of these are through banks or financial institutions that could go through strain. So you got to think that a lot of people have these loans right now where they're giving out 8% loans, right? Now let's say that the interest rate goes down to 6% or very dramatic, maybe a 5%. That's how they make most of their money. I mean, a bank makes almost all their money by taking your money, giving you 1%, and then lending their money out at 6%, 7%, 8%, right? So as kind of mentioned with the government bonds, as that top end for them lowers, it makes it that much harder for them to make any profit. It makes them that much harder for them to do anything at all, right? So, there's not going to be as many people making so much money on paying debt or personal loans or buying houses or anything like that. There's just not as much money in that market. I personally think that rates will fall anywhere between 1% to 2%. And like I said, as that's their main source of income, it's really going to affect things negatively. So if you might getting 4 or 5%, it's going to be really hard for them to pay you that 4 or 5% if they're only getting 5% from their consumers. So I don't know if you guys remember what happened recently with all the banks failing and just the miserable situation that put a lot of people in. I'm kind of worried about that because a sharp shift in interest rates towards the negative will make it a very tough marketplace for banks. As they might be getting more loans because more people are suddenly interested in houses. There's just not as much margin there. And I kind of worry about that. So I'm going to give it like a 1.5 out of 10. I'd try to move away from it. I would try to put the money in almost anything else. Even government bonds, I would say, would be better than money market accounts if you're really scared. I know there's been a lot of people, addressing their concerns for this year and what could possibly happen. But personally, man, I would get out of that. Number 5, we're going to move on to crypto. With the idea of when other things go well, crypto following suit. And I think we can expect a very good year for crypto. So like I said, if stocks are going up, crypto normally goes up. If real estate's going up, crypto normally goes up. Like it kind of follows suit in more dramatic fashion. I mean, you don't see, stocks go up in the way that crypto does. You don't see stocks crash in the way crypto does. Like a 20% crash in a day would never happen for the stock market. But for crypto, they have other plans with that. Even a 50% crash can happen. As we see at the end of 2023, really starting to launch crypto into space. I mean, I don't know about you guys, but if you hold any crypto at all, I don't hold near as much as I would want to. But I mean, my portfolio at least doubled in the second half of the year. And I imagine to see, that with the Bitcoin halving happen, with the interest rates going down, I imagine to see a lot more of that. I don't really see why that would stop. I don't see why money would stop pumping in there. We have ETFs getting passed. We have just so many big company names that are holding crypto. And this is a major event, man. It seems like once the halving happens, it kind of pauses for a bit. But after that, once the ecosystem catches up, it skyrockets. And I could easily see Bitcoin, heading up towards a 6-figure price frame. And, obviously you can go dive deeper into all the altcoins and what could happen there and all that stuff. But I would say overall, crypto, very good investment. Just do your research, man. It can bite your butt quick. Like crypto can get really ugly really quick. So make sure that you take care of that. But I would say it's a solid choice. I give it a 7 out of 10. I can't give it, as high as real estate or as high as stocks just because it's not as safe. There's more risk in crypto, in my personal opinion. I do believe in it very much so in the long term, but there's no way it doesn't go up, man. I mean, Bitcoin is halving and there's just no shot. Like if you just follow the trend of what's happened before, history repeats, right? That's what they always say. Them are the ones I talked about. Like I said, I mean, I could bring up other ones. I could talk about tech companies. I could talk about gold. I could talk about all that. But to be honest with you guys, I just don't have expertise in that field. And I really want to make these videos as in-depth as possible about stuff that I know about. So like I feel comfortable talking about the things I just talked about because that's what I've seen in my investment world. That's what I've invested in. That's what's built the things that I have. And ultimately, when it comes to real estate, I can talk about real estate all day. When it comes to crypto, I can talk about crypto all day. Stocks, same thing. So these are things that I feel like I could share my experiences with, the things I've noticed in the past, the history, like I said, that's repeating itself and all that. But I don't want to sit here and say, gold's a terrible investment. Don't buy gold because I've never bought gold. I've never owned gold other than like jewelry. And I don't know what happens with gold, like when inflation goes up or down or when interest rates go up and down, or, you know, when crypto goes up or whatever. I don't know them things. So I'm sorry that I can't share you that value on this video. It's just not in my expertise. Hopefully you guys respect that transparency. But overall, do you guys agree or disagree? Do you guys think that I'm right on these? If you guys had to rate the 5 things we went over, if you had to also give a rating, do it in comments, literally. Number 1, real estate. Give it a 1 through 10. Number 2, government bonds. Give it a 1 through 10. Number 3, stocks. Give it a 1 through 10. Number 4, money market accounts. Give it a 1 through 10. And then number 5, crypto. I'm curious what you guys think, man. You know, right now we're just starting this type of content up, and I really want to connect with the audience and try to be not just a one-way street. You know, like, I've been replying to all your comments. I've been reading them all, and I've been, you know, there. So I want to see what you guys think about all these things that I brought up. Heck, if you know about gold, if you hold gold, talk about gold. I would be interested to learn about it. And if I'm missing anything, if I'm missing any major events that's happening in this year, please feel free to share that as well, because ultimately that's valuable. The main goal of this whole channel, man, is to add value to you guys. So even if it's someone else in the channel that's an expert on gold that wants to post a paragraph about it, that's awesome, dude. I appreciate that insight, not just for me, but for everyone. Thank you guys for all the support on the video, man. If you guys do appreciate these types of videos, make sure you drop a like, subscribe, put the bell on, man, if you haven't. We really need the support on these videos, man. I want to try to start getting 100 likes on every video. That's kind of an instant goal of mine. So if you guys could do that, I would appreciate that. But 2024, man, to me personally, if I had to give the year rating, I'm very bullish, man. Like 9 out of 10. I feel like this year is just going to be really great for investments, and I'm excited to get the ball rolling. I'm excited to see what happens, and man, it can get really, really good. It can get really interesting, and we'll see what happens with the election and how that affects it and everything like that. But it's going to be a really good year, I have the feeling. Thank you guys so much for watching, man. You guys have a great day, and I'll see you tomorrow with another video. We out.